Good evening, esteemed viewers. I am Trang, and welcome to our in-depth financial analysis segment. Tonight, we delve into the most recent developments in the global financial landscape, providing you with a comprehensive overview of the current situation. The world economy is navigating a complex and precarious period, marked by persistent inflation, rising interest rates, and increasing fears of a widespread recession. Let's examine the key factors shaping today's financial climate. Firstly, inflation remains stubbornly high across many major economies. Despite aggressive interest rate hikes by central banks around the globe, consumer price indices continue to exceed targets, eroding purchasing power and squeezing household budgets. The surge in energy prices, exacerbated by geopolitical tensions, has been a significant contributor, alongside ongoing supply chain disruptions that trace back to the pandemic and recent global events. The conflict in Eastern Europe, for instance, has not only triggered an energy crisis in Europe, but has also disrupted food supplies and amplified inflationary pressures worldwide. Secondly, central banks are caught in a difficult balancing act. They are compelled to raise interest rates to combat inflation, but this tightening of monetary policy risks triggering an economic slowdown or even a recession. The Federal Reserve in the United States, the European Central Bank, and the Bank of England have all embarked on aggressive rate hiking cycles. However, the pace and magnitude of these increases are raising concerns about their potential impact on economic growth. The housing market is already showing signs of cooling in response to higher mortgage rates, and business investment is becoming more cautious as borrowing costs rise. Thirdly, global economic growth is decelerating. The International Monetary Fund and other international organizations have revised down their growth forecasts for the global economy in the coming years. China's economic slowdown, partly due to its zero-COVID policies and real estate sector challenges, is adding to the headwinds. The risk of a synchronized global recession, where multiple major economies contract simultaneously, is becoming increasingly palpable. Market volatility remains elevated across asset classes. Stock markets have experienced significant swings, reflecting investor uncertainty about the economic outlook and corporate earnings. Bond yields have risen sharply, and credit spreads have widened, indicating increased risk aversion. The cryptocurrency market has also faced considerable turbulence, further highlighting the fragile investor sentiment. Emerging markets are particularly vulnerable in this environment. Rising interest rates in developed economies are strengthening the US dollar, making it more expensive for emerging market countries to service their dollar-denominated debt. Capital outflows from emerging markets are also intensifying, adding pressure on their currencies and financial stability. Certain developing nations are facing acute debt distress and are seeking assistance from international lenders. Looking ahead, the trajectory of the global economy remains highly uncertain. The effectiveness of central banks' efforts to tame inflation without causing a deep recession will be crucial. The evolution of geopolitical risks and their impact on energy and food prices will also play a significant role. Businesses and consumers alike are facing a challenging period of adjustment, requiring careful financial planning and risk management. Governments will need to implement prudent fiscal policies to support sustainable growth and mitigate the social impact of the economic slowdown. International cooperation will be essential to address global challenges such as inflation, debt distress, and climate change. The coming months will be critical in determining whether the global economy can navigate these turbulent waters and achieve a soft landing, or whether a more severe economic downturn is unavoidable. This is Trang, reporting on the latest financial